Welcome back to Lender Soapbox. We are here with partner in crime, Jackie Hurtis.
Oh, I love that.
How you doing?
I'm good. How are you? Well, I could be better. We could all be a little bit better.
Yeah, we have a lot to talk about today. We have had a crazy 5 days in the mortgage world.
So true.
Jackie, give us a quick rundown of what's happened.
The market has been extremely volatile, giving me like March 2020 vibes. Would you agree?
Definitely.
We saw some of the best rates we've seen all year up until last Friday. I think some of us were talking to refinance clients, and then that door slammed on them Monday when rates jumped up because of all this tariff talk.
Tariff talk. Yeah, that's the key. And I think what's really interesting is I had this conversation with Chase and Caleb on this podcast like 2 weeks ago. We were like, hey, you can't time this market. And I gave an example from 2020. And I was like, you wake up one day and it's completely different than the day before. And you can't expect that your negotiations, getting under contract, all of those things are going to happen in a time where the rates are going to stay exactly the same. So like you can't, if you're out looking for a house, you cannot time the market. It's literally impossible. So instead of trying to time the market, it's like buy when it makes sense for you to buy.
Yeah.
Not when it makes sense for, everything is stars aligned. Because you're right, like Thursday, Friday, we had the back-to-back headlines. If you had just seen headlines, it would have said best rates in the last 8 months. Rates are at 6.5, 6.6. Best thing we've ever seen.
It was beautiful.
And then today, it's Wednesday, and it's the worst rates we have seen all year. Those are the headlines that we saw.
Yep. And well, a lot of people didn't see the downside, right?
True. Yeah,
because
of course.
Monday, I'm getting calls like, I hear rates are going to 5% this week. I was like, where? I would love to know where you guys are getting this information.
Yeah, I'll take 5%.
Yeah, I'm like, I wish that were true. But like timing the market, you and I who are in the business, we couldn't have even timed the market well enough to get pre-approved and under contract Wednesday to lock it Thursday or Friday, right? Just because even if all the people who went under contract on Friday, which I'm sure there were a ton, are waking up Monday and realizing like, the payment I thought I was getting is not the payment I'm getting because you couldn't lock in that rate yet.
Right.
So it's getting pre-approved, or if you're refinancing, it's looking at the numbers ahead of time and striking when the opportunity rises.
Yeah, absolutely. I think the other thing is, we had this major volatility in the last 5 days, but if you zoom out, rates are about the same as they were in February.
Yeah.
Like, there is not that much turmoil. I mean, it's like if you were interested in buying a house in February, you're probably seeing the exact same rates today.
100%.
But if you're comparing it to what it was on Friday, you're going to be like, oh man, rates are terrible.
I mean, clients are reaching out to me who I talked to middle last week when they didn't hit their lowest, right? And they're saying, hey, I went and looked at a house last night. Can you read numbers? I'm going over the payment. We're not necessarily talking about the rate, and they're not even noticing a difference.
Right.
Right? We're all posting that the bond graph, and it looks really scary. But realistically, monthly payment-wise, what are we talking? Not that big of a jump.
Yeah, absolutely. I mean, even if you're looking, even with the volatility that we saw, if you're buying something at $500,000, $600,000, you're talking about the difference between like $60 to $80 a month.
Yeah, which isn't a small amount, but we know you're not keeping
But it's also not your life savings.
Yeah, you're not keeping this loan for 30 years. We all know that. So it is exactly what you said. It's getting in when you can afford it. And once rates go down, when they go down, people were able to take advantage of those couple days where they were low, getting in and taking advantage of rates when they do go down.
Yeah, absolutely. So we had Sam Gray and Leo Dunleavy on the podcast last week, and they said the 3 most important videos for all Instagram is the first one is a little bit about you. So why you got in the business, all of that. So
Me.
How did you get into this business so you can clip it for yourself?
I was in school at Wisconsin for real estate development. So we had a real estate program. Everyone in there, like their parents, their dad was a developer. So everyone knew what they were doing, and I had no idea what I was doing. I was in a real estate club, which sounds so nerdy.
Real estate club?
That sounds so nerdy saying that. Real estate club. We had a career fair like my junior year. I met Ryan at it. I interviewed for just a summer job in college, and he was looking for somebody full-time. So when I graduated, I was interviewing for development jobs. My mom was like, well, just reach out to that Ryan guy. Just see what he has to say. I was like, I'll reach out. Ryan slides a W-2 across the desk and is like, this is what loan officers make. And I was like, sign me up. And I've been doing it for 10, 11 years now.
So when you try to explain it to your friends, what do you tell them you do?
I'm a banker. Yeah. I'm a banker. I help you finance a house.
I say I sell money.
I like that.
They're
I
like, what do you do?
money.
I'm like,
Yeah.
I sell debt.
I give you money.
I put people in crippling debt.
For 30 years.
I'm like, oh, me? I put people in debt.
But people really don't
And then
realize
people are
what
like,
we do.
oh. What's really funny, though, is I tell people this all the time. I'm like, if you're at a party or whatever, the first question that people who are bad at small talking do is ask you what you do. And when you say you're in mortgages,
Yeah.
there is only 2 routes. Route 1 is there's no follow-up question.
That's true.
There's just like an awkward
so you're a
silence.
realtor.
They're just like, oh, okay, I don't know what that means. And then 2 is just like, what are rates doing? Which for most people, it's like, why do you want it? Like, why does it really impact you at all?
Yeah.
Because unless you're buying a house, rates don't really impact
Correct.
you at
At
all.
all.
Even if you own a house, rates don't impact you. The only time rates impact you are when you're buying a house
Or refinancing.
or refinancing.
Yeah.
But not really, though, because even if you're refinancing, you might be planning on refinancing.
Yeah.
But you have a loan.
You're there already. Yeah.
already
You don't
there.
have to do anything.
Yeah.
Yeah. Oh, when I tell people I'm a loan officer, I always say like mortgage lender because I feel like that word mortgage at least gives them a little bit of intel
Context
into
clue.
what I'm doing.
Yeah.
But they're like, oh, so you're a realtor. And I'm like, no, I'm a lender. The realtor's showing you the houses and writing the contract for you. But there is a lot of like, our friends honestly just don't know what we do
Right.
outside of the business. And so it's educating them,
That's always fun.
isn't it?
So are there any like common conversations that you're having with potential buyers or people that are under contract right now where, you know, they might have been on the sidelines, now they're jumping off, they're under contract. What is there anything that you've been seeing?
Like personal experience. Like I have a bunch of realtor friends who are buying right now, right? Like it's the people who are scared and I'm telling them my story. Like they're like, why would I buy right now? I pay $2,000 in rent. My mortgage payments would be $3,000. I'm like, yeah, I get it. When I was looking at buying, when I bought my first place, my rent was $1,300 a month. My mortgage payment went to $2,400. Like I get it. I would have saved more money renting, but I've made so much more money buying that house with the appreciation. And now that rent or my mortgage payment seems ridiculously cheap compared to what a mortgage payment would be. Right. So for the first couple, I'm like, for the first couple of years, you probably are going to be upside down compared to rent. But long term, it's a hedge against inflation, right? Because rent is going to continue going up. So just giving personal experience. I have real estate friends who are buying right now. I personally would buy right now if the right house came up. Just telling them like, yeah, just exactly what we were talking about. Just because the interest rate is slightly higher, there's so much advantage to buying in this market with temporary buydowns, price cuts, seller credits, all that kind of stuff. So yeah, you're right. Your mortgage payments would be a couple $100 higher than if rates were at 5%. But you also got $15,000 from the seller to cover your closing costs.
Yeah, that's up really quick. Yeah, I mean, a good rule of thumb is like if you're listening, you're like, how much are closing costs? Because a lot of times everybody just focuses on the down payment. You need like 3 to 5% down. That's the minimum. Everybody's focused on that, but you also have closing costs, which are paying for all of the other fees that are associated with the loan. Typically, closing costs are going to run about 2% of the purchase price. Is usually like a good rule of thumb that I tell people.
Michael loans. Michael size loans.
Sure. I would say between 1% and 2% is usually what your closing costs are going to be. So getting those covered, I mean, it adds up extremely quickly. If you can, to your point, if it's $500 a month and you're getting $10,000, that adds up extremely quickly. I mean, you're talking almost 2 years of
what's your
that difference in your mortgage payment before you start losing money on that deal. And in 2 years, you're talking about probably 8% appreciation on your house. You're talking about thousands of dollars in equity that you're building up. Plus, you have the option in the future to refinance or reevaluate where you're at. And if you need to change something, you have the ability to do that. But until you're in the game, you can't really play the game.
Yeah. And things that we don't talk about, tax advantages of owning, right? Writing off the property taxes, mortgage insurance, mortgage interest. And then I was thinking, like, mortgage rates started going up back in 2022. And every year since then, they're going to come down. They're going to come down. This is the year they're going to come down. And we've seen it this year twice now, I think. And I added up, like, if you were paying $2,000 a month in rent for the last 3 years, that's $70,000. Like, that you've just thrown away because you're waiting for rates to come down and we have no idea when that's going to happen.
Right.
So what are you doing? Like you're better off just getting in now, regardless of what the rate is.
I think even if you saw like a short, I think some people that are on the sidelines are like, hey, well, there is a potential that prices come down. I'm like, well, historically prices haven't come down, but even if they did, there's a reason that prices come down. So you have to remember that like real estate's not in a silo. If prices are coming down, that means that we're in a massive recession. And if we're in a massive recession, that means your investment accounts look 20% less than they do right now.
True.
Your investment accounts, what you're seeing right now is not what it's going to look like if we're in a massive recession and you see a huge cut in prices. So you can't pretend like everything is going to be the same except for home prices.
Yeah.
So again, it's like, yes, you might see a decrease, but you're also going to see a decrease in your investment portfolio. You're going to have to sell those investments, take a loss on your investments just to buy a house that's cheaper. At the end of the day, you're probably not going to be saving that much money.
Yeah. Like, is it really a win?
Exactly.
Yeah.
Where instead, if the stock market's up, you can realize all of those gains, purchase a house, and then you're riding it out. Because most of the time in a recession, you might see a dip, but more than likely, if you look over a 5 to 10 year period, you're going to see appreciation on the house.
Oh yeah, it's going to come back.
It's typically 4 to 6% a year.
Yeah.
Now 2020 was a little bit different. It was probably closer to like 15%
Great days.
appreciation. But yeah, I mean, it's a huge advantage to at least get in the game. Are you seeing a lot of people upgrading houses, so like selling an existing house and upgrading, or are you dealing with mostly first-time home buyers?
I think it's like all depends on who our referral partners are, right? Like I have some people who strictly work with first-time home buyers. We've been doing it long enough that we have a lot of past clients. The people who are moving right now, typically it's like there's a life change happening because you and I, we're both in a house right now. We have to be motivated to deal with the higher rates because we're comfortable. But like you're having a baby, you're getting married, you're relocating. We have a ton of relos. So it's people who are moving up because they need to, because of family changes, or they're relocating to Nashville. What about you?
Yeah, I would say it's the same. I would say it's mostly first-time home buyers and probably like high net worth first-time home buyers. So, they're looking between $600,000 and $700,000. They have a solid down payment. But what they're struggling with a lot, like most of the conversations I'm having, for some reason, everybody wants to land in the like $3,000 to $3,500 payment range, and they have 5 to 10% down. So looking at something between like $650 and $700, you're probably looking at like $4,000 a month in a monthly payment. So the struggle is deciding, hey, do I want to spend that extra $500 and get a little bit nicer of a house? Because I can tell you just by looking at the market that the difference between a $700,000 house and a $500,000 house is more than $200,000.
Yeah.
As far as the product that you're actually going to get.
And where you're living.
And the location. Yeah, absolutely. So, yeah, I think it's a big difference. Do you see any of your realtors struggling with like a specific price point?
That's a good question. In terms of like selling it or...
Or finding it, or
a
buyer's agent, like finding the right spot.
When people come to me and they're like, I really want my payment. I'm paying $1,600 a month in rent. I want a mortgage payment close to $1,600. I'm like, are we going an hour outside of Nashville? Realistically, where are you going to be comfortable living? Because that's kind of impossible right now, right?
Yeah, I would say it's really hard to get under $2,000 a month.
Unless you're putting a massive amount down.
Sure, unless you have a massive down payment. And it's like for people that are saying that, they're like, hey, I got to be at $2,000. It's almost like reanalyzing. Sometimes you have to reanalyze what else is going on in their financial picture, because sometimes there's other things going on. Like if you have that initial conversation, they're like, I want to be at $2,000. A lot of times I'm like, why $2,000? And you'll find out a lot where it's sometimes there's clients that are like, oh, well, I have $20,000 of credit card debt.
Yep.
And you're like, okay, well, what if we paid that off?
Yes.
And put down less?
We do that all the time, right? I have people come to me and they're like, I don't want to pay mortgage insurance. And I'm like, okay, I'm sure no one wants to pay mortgage insurance. But then you run the numbers and you're like, you could pay $50 of mortgage insurance and pay off $500 a month in debt. That's a win all day long. Right?
Yeah, absolutely.
So it's restructuring it. Like coming up with 20% down is not ideal for a lot of people. Like there are so many smarter ways to structure a loan.
Yeah, especially if you have like outside debt, because if you can decrease your overall debt, whether that be credit cards. Another great example is student loans. I had a client who wanted to purchase a house, and they were asking me about a 2-1 buy down. Are you still doing 2-1 buy downs
All the
frequently?
time. Yeah.
Great. So for people who don't know, a 2-1 buy down is a temporary buy down on your loan. You get a 2% discount on the mortgage rate for the first year of the loan. Second year of the loan, you get a 1% discount. So if your rate's at 7, the first year you're paying 5. The reason you do this is so that you get a lower monthly payment for the first 2 years. But you can use it to your advantage in several different ways. For example, these clients were perfectly fine with the monthly payment. However, they had $600 of student loan debt.
Okay.
They can do a 2-1 buy down, take all of those proceeds and pay off the student loans. And by the time the end of the 2-1 buy down period, they're going to be fine with the monthly payment because they're not going to have the other debt.
Ooh, that's really smart. Yeah.
So it's like, it's not just to soften the blow of the monthly payment, but it's like, where else could we be using this money? Because your overall expenses are going to be the same.
Yeah, you're like, how can we utilize this? We do that kind of structuring a lot when people are like selling and buying, because people are always like, oh, I want to use all the proceeds to put it down in the new house. And I'm like, okay, you run the payment. And they're like, oh, I'm not comfortable with that payment. I'm like, well, what if we put less down, got rid of this $500 a month in debt? Now we have room to go higher on the mortgage payment.
And your life's better.
Yeah.
Because
or keeping some of it. Like people love to like use every penny. I'm like, don't you want to keep some of that in the bank to invest or whatever, rainy day fund?
Sure. The other thing we look at a lot is comparing, okay, let's say you sell this house, you have $250,000. You could go buy a $900,000 house and put it all in, and that's your monthly payment. Alternatively, you could buy a $700,000 house and use $200K of that to remodel the house. The benefit there is that you don't have to go find the perfect house because you can make it however you want. If you have $200,000 in cash, you can say, oh, I hate this kitchen. You're like, great. Spend $50K of that $200,000 and fix the kitchen.
Yeah.
Improve the value of the house. Like across the board, it's a better experience. If you have cash, which again, the people that have the cash have already invested in real estate for the last 5 years.
True.
You have to be in the game.
But that is why, like, I wish I could shake some of my friends, first-time homebuyers, like people who are renting right now, who think like, oh, I'm waiting for rates to come down to buy, who don't realize like now is literally the perfect time for somebody to get in the market who has no cash, because this is the market for you. This is the market where the seller is giving you everything under the sun to purchase a house with literally no money out of pocket.
Yeah, I mean, we have a 0% down program.
Yeah. Have you done it? We do it a lot.
I haven't.
Have you utilized it?
No.
Or like we have conventional 1% down where Guild will give.
I've used that one.
That's a $5,000 free money from Guild.
Explain it a little bit. Like explain it like you would explain it to a client.
Okay, so it's a conventional 3% down loan. The client has to bring 1% of their own funds, and then Guild will give a non-repayable grant up to $5,000 to go towards the remaining down payment. So you couple that with a seller credit of 3%, and you're literally $400,000 house you're coming to the table with, what, $4K?
$4,000.
Yeah.
Which
is less than if you were to go rent a new apartment right now. That is less than 1 month's rent and security deposit.
Exactly.
But people just don't know that that's even an option.
Right. 1% down, you get $5,000 plus you go in and you ask, hey, seller, I know you're trying to sell this house. You're in a buyer's market right now. You have all the leverage. Give me 3%. I'll go in at full list price. So let's say the house is $400,000. You go in at list price. You go in at $400,000. You ask for $12,000 in cash. You use that $12,000 to pay off all your closing costs. You get $5,000 from Guild, 1% down, $4,000 cash, and you're in.
Yeah.
That is unbelievable.
Yeah, it's insane. What big objections are you hearing right now, aside from rate?
Honestly, it's just the payment. Most of the time, I try to focus on payment. Again, it's not because it's like smoke and mirrors. It's more of just like, hey, this rate that really doesn't matter. Yeah. Like it is what it is. You're not really going to affect it. Everything we talked about at the beginning, it's like this market has been insane. You can't really time what the rate's going to be, but typically it's just, hey, this is way more than I want to spend. They want to be close to Nashville. They don't really want to go outside of the city. And for those types of people, they're just not going to get what they want. And a lot of times it's like you can't really convince them otherwise. I mean, if they're like, hey, I really want this $700,000 house, you're like, okay, this is the payment. I mean, this is just
what it
the
is.
reality.
Yeah.
I mean, you can't really get around it. And there's really no games you can play. So that's the main objective. objection that I'm getting where it's just like, hey, these payments just don't really make sense. Outside of that, I mean, like the people that want to buy a house can get a house right now. The inventory is up. You're in a buyer's market, which is those usually don't couple together.
True.
Yeah, I mean,
it's the perfect storm. Like when we were in 2020, 2021, we had first-time home buyers. I had people who put in 15 offers on homes and didn't get them. They went under contract, sight unseen, saw the house closing day after they signed the papers because they literally just could not get under contract without doing that. And people were complaining like, I just can't get a house. I can't get a house. And now you have the perfect storm to get it, but you're upset. Like nothing is ever going to be lining up perfectly, right? There's always going to be a hurdle that you have to overcome. Right now it is affordability. But you have a perfect market for first-time homebuyers to get in because you like everything that we've mentioned, like sellers are coming off on list price. You have all the negotiating power in the world right now. You're not up against 5 other offers when you're going to look at properties. Like it's a good market for first-time homebuyers to be in right now.
Yeah, I totally agree. I mean, it's very similar to what we were talking about earlier, where it's like real estate's not a silo.
Yeah.
You're going to have one of the problems. Not everything stars are going to align. You're either going to have the problem of there's way too many buyers in this market, which is going to happen when rates come down. When rates get below 6.5%, once we start seeing the high 5s, low 6s, there's going to be too many people in the market. And we're going to see what's going to happen. What we saw in 2020, where it's like, you can't get under contract or you're going way over list and you're spending more cash to get it.
Which the first-time home buyers right now do not have.
Exactly.
Right?
Yeah, exactly. Or you're going to have a higher payment right now, but get into the house and not have any competition and maybe even get in for free.
Yeah. Yeah. With very little.
But you have to pick, you have to choose your battle. If you don't have a ton of cash, right now is like you said, it's the absolute perfect time. If you have cash and you want to wait, that's up to you, but you may even be spending more than you would be right now at the higher rate.
When you look at, even if the rates go down, if you have to bid $50K over to get the house, did you really win?
Exactly.
Did you really win?
I always tell clients, I'm like, where is your interest rate on your mantle? Like, did you frame it? No, because nobody gives a shit.
I do kind of want to frame mine.
Like, yeah, maybe the people in 2020 have it framed, but I'm just like, hey, nobody's going around being like, look what rate I got.
That's so true.
What people actually care about is the monthly payment. And you can get into a house with very limited cash at the monthly payment that you want right now. So what are we waiting on?
I do feel like people are finally starting to like realize like, oh, this is just the new normal, and like mid 6s, 7% is just what it is right now, because we've been saying for 3 years they're going to go down, and they haven't. People are just like, okay, I've waited on the sidelines for 3 years. Like, I just have to do something now. People are starting to finally accept that that's where rates are at. I know when my parents first bought their house back in the 80s, I want to say the rate was like mid-teens, like 15%. And they refinanced that thing like 5 times, right? There's no limit to how many times you can refinance. So if you get in at 7% and rates go down 6 months from now, great. If they go down again 6 months from that, cool. Like there's no limit to how many times you can refinance as long as the numbers make sense for you.
What's harder than refinancing is purchasing.
Yeah.
Because you can always
Very true.
refinance.
Yep.
It takes about 3 to 4 weeks to do a refinance. If rates hit the right time, you can refinance whenever you want. What you can't do is get into a market where you can get everything paid for.
Yeah.
That's very market dependent.
That's very true.
So, yeah. Are there any other weird questions that you've been getting recently, or things that you're just like, I haven't even considered that?
That's a good question. Nothing like off the top of my head that I can think of weird wise.
The only weird one I get is crypto. They're like, can I use Bitcoin to
You
purchase?
would get people asking about crypto.
I'm like,
you can do it.
You can do it.
I know I've done it.
Yeah. Yeah, you can prove like the sale of Bitcoin as assets to purchase something. But yeah, that's the one I get the most often.
You would get
You're just like, yeah, bro, how much crypto you got? Yeah, I'm like, yeah, sure. I guess we can look at that.
I've used it from like capital gains perspective before, from the tax returns and stuff.
What do you mean?
Like they claimed it on taxes as what it would be capital gains or something, and so we were able to utilize it that way. Are they trying to use it as down payment in your scenario? Yeah, I know there's a way to do it.
I did that personally.
Which one?
I've used crypto to purchase something.
Of course you have.
So back in 2020, this is actually a fun story. While we wrap up, we got like 5 minutes, but I went to go invest in a property in Cleveland Park, and I had a crypto portfolio, and there used to be a company, I think The company may still be there, but they will let you leverage your crypto into cash. So you put it up as collateral, you borrow it, and then you use that to purchase the house, and then you remodel it, and then you sell it, and then you convert it back into crypto.
Oh, that's cool.
Crazy. But I wouldn't do that game now because crypto's so volatile.
Yeah, that's absolutely fair. Talk to me credit. Do you get like credit pull objections?
No, because we do soft credit pulls.
But would you say that that's like the biggest objection I have is like, I'm not ready to get pre-approved yet. Like I just signed a 12-month lease. And I just want to see what my options are, but I don't want to do the pre-approval.
When's the last time you went to the doctor?
Me? We'll say a year ago.
A year ago?
Yeah.
Why'd you go?
Checkup.
That's what this is.
Yep. I love that analogy.
That you're not signing anything, nor are you saying, hey, I'm buying something in the next 6 months. The reason that people say that there's a 90-day shot clock once you get pre-approved is because most lenders will do a hard credit pull, and your hard credit pull is only good for 90 days. What we do at Guild is called a soft credit pull. Soft credit pulls is like just checking in with the credit company. It doesn't show up in your credit report. It just says, hey, where are we at?
Yep.
It says, here's their general credit score, and we will use that as the pre-approval. So not only does it not show up as an inquiry, it's also just, hey, we're just getting the credit score from the bureau so we can tell you where we're at. If we need to fix it, we can do that too. But it gives you a rough idea. And this is merely saying, hey, if you were to buy something right now, here's where you're at. Would you not want to know that information?
So I talked with a client yesterday. They just signed a 12-month lease. And they're like, we're not ready to do anything yet. I'm like, now would actually be the perfect time to do it because you have all the information that you need to make an informed decision moving forward. Best case is you're good to go right now and you just wait until your lease is up, which is another thing. Like there's no reason to wait for your lease to be up. Like you don't need to do that. But people, for whatever reason, seem to think that they do. And I'm like, there's so many ways to price in the cost of breaking your lease into the deal, which is a whole nother topic.
I mean, that's exactly what we're talking about as far as like concessions go. I had a conversation with a client who's like, yeah, dude, but I have 6 months left on my lease. I'm like, just get the seller to pay for it.
Yeah.
Just get 6 months of payments in credit.
Also, a lot of people, you like check in with your landlord because a lot of times, like when I broke mine to do it, I had to pay like 1 year or not 1 year, 1 month maybe, and then security deposit. Mm-hmm. So like it's really not that expensive, and you absolutely can negotiate it into the contract.
Absolutely, yeah. But as far as like waiting to get pre-approved, I'm just like there is stuff that I have seen that would shock you, and you have no idea it's on your credit report. A perfect example is like my girlfriend has a AT&T bill for $50 that went into collections that she had no idea about, tanked her credit.
Yep.
I'm like, okay, well, we got to get this fixed. You want to know when you don't want to fix it? When you're 30 days out from closing. Because you have to wait on the credit bureaus. You have to do, but if you're a year out, you're like, let's just fix this right now.
That's what I'm like,
problem solved, moved on.
Do it sooner than later so you have all the information. If there's something that you need to work on, you have the next 12 months to work on it. Best case is you're good to go right now.
Also, when you're setting up the pre-approval, you're like, hey, here's the ballpark of what you qualify for. Go set up a search on Zillow. You can see exactly what things are selling for.
Yeah.
And now you get to just play a game for 12 months of seeing cool houses that pop up on your Zillow notifications. True. I mean, you're just like, you at least know.
Yeah. Or you're like, oh, I don't like that purchase price. How much do I need to save up between now and then to get where I want to be, right?
And guess what? It costs nothing.
Yeah.
Getting pre-approved, there's literally no reason to not get pre-approved and at least know what's going on.
There's legitimately no downside, but
no.
I'm like, I wonder why people are still hesitant to do it.
Couldn't tell you. But that's the conversation I have. I'm always just like, it's exactly like going to the doctor. It's like, let's just see where you're at financially, make a plan. But if you're just like trying to willy-nilly go through it, it's impossible to know exactly what you need to do.
I hear from agents who are telling me about their clients who are renting right now. They're like, oh, they're just not ready to do it yet. They're like, the process seems so intimidating. Mm-hmm. So like, break that down for me. Explain why it's not intimidating or what the process looks like. Somebody calls you to get pre-approved. What does that look like? Yeah, it's super simple. So all we do is we chat about what your goals are. And then I'm going to send you an application. It takes 10 minutes to fill out. It's exactly like filling out a survey. And then we're going to collect your income documents, which is your pay stubs and W-2s, which will take you 5 minutes to pull. And then we're going to set up a Zoom call, and we're going to talk about all the numbers. That's it. Yeah, and it's completely free.
completely free, and you get to hang out with me for an hour.
That's a win-win.
It's a win-win. It's a win for everybody.
I want to get pre-approved.
Yeah. I can recognize that it's very intimidating, but it's also like partnering with the right person. Because like, yeah, if it's some 60-year-old dude that's talking to you like your dad talks to you, it's probably intimidating. Because you're like, he's using all this jargon, I have no idea. When you sit down with a person like me or you,
Yeah.
it's like we're just friends. Like we could go. I've had pre-approval meetings over a beer. I'm like, we can talk about this whenever, because it's like you're not committing to anything. And if we need to talk, we just need to address the elephant in the room, which is your finances, and we can talk about that whenever. Because at the end of the day, it's like this is the reality. When we can get you to a new reality, but we got to figure out where you're at right now to get you where you want to go.
Yeah. And it's just a conversation. Like it's not scary.
Nor is it judgmental. It's like, hey, we'll meet you wherever you're at. If you're buying a $200,000 house, if you're buying a $2 million house, for us, it's like, it's the same process.
Yeah.
So we can chat about, the numbers are just bigger.
People come and like, I just don't even know where to start. I don't know anything about this process. I'm like, that's great. That's literally my job. My job is to walk you through the whole process. You're not expected to know what the next step is. Like, I'm walking you through that.
Exactly.
We don't expect that you know anything about it because you've never done it before.
Yeah, it's a giant black box that we're inside of.
Yeah, that's a good way to put it.
Yeah, it's like a big Jack in the Box. It's like, come on in.
Come into our world.
Well, that's all the time we got. This is a quick 30. So
thank you.
It went quick. Thanks for coming
Go
on.
Guild.
I'm sure you have it back on. Being a guild partner. So
love it.
Where can people find you?
Your mortgage lender on Instagram.
Your mortgage
lender on Instagram.
That's how I always read it.
There.
I always read it as your mortgage lender.
That's how it should be.
Yeah. It needs to be in all caps next time.
It needs to be everybody's mortgage lender.
Yeah.
I'm going to change it today.
Everybody's mortgage lender. Your mortgage lender. Thank you, Jackie. We'll see you next time.
Thank you.